So a lot can be gathered on the future state of the housing market in 2022 based on some of the commentary or the feedback from some of the largest CEOs of home builders in the United States. And one of those CEOs that I'll be specifically focused on in this video is that of Toll Brothers. If you don't know who Toll Brothers is basically one of the largest home builders in the luxury segment of the United States. Now, one thing to note here is some of the commentary mentioned in this video is going to be predictive in nature, and due to that, predictions should be taken for what it is that they're worth. But with that said, these predictions are coming from the leaders in the industry group, and therefore perhaps some level of credence should be given to it. But before I get too far into it, don't forget to smash the like button for the YouTube algorithm, subscribe to the channel, ring that notification bell, and let's get into it. Now, in late December, the Toll CEO came out and said that supply is very limited and the resale market is as tight as it was before. Lack of supply and high demand has given builders such as Toll Brothers pricing power. The average sale price of newly contracted homes rose nearly 25% year over year to $1 million in the latest quarter ending October. So that should give you some perspective in terms of the market in which Toll is basically acting in, where the average price of the sale of their homes is about $1 million. Now, with that said, some of the things that Toll Brothers is basically seeing is permeating across all home builders. So some builders such as that are playing in the $400,000 market price range, such as your D.R. Hortons as well as your Lennars of the world, are facing or seeing the same things that some of these Toll Brothers executives are. But due to the amount of pricing power that a lot of these home builders have at this point in time, it has resulted in their stock prices soaring in 2021. Specific to Toll Brothers, Toll shares have risen by 63% to nearly $70 a share, along with some other home builder stocks as well. The Toll still trades cheaply for around 7 times estimated fiscal year 2022 income, as investors caution about the extent of the current housing uplift. Evercore ISI analyst Stephen Kim says that the Toll hit about $11.63 per share in fiscal 2022 and more than $15 per share in fiscal 2023, and they have a price target on Toll Brothers for $93 a share. That $93 a share represents almost a 20% upside when it comes to Toll Brothers stock. Now, with Toll Brothers playing in the upper end of the luxury home market, they do have certain advantage relative to other home builders as well. For example, about 20% of Toll buyers pay cash for borrowers. The average loan-to-value ratio is less than 70%. Even if rates go up, our buyers do not have the issue of affordability to buyers of lower-priced homes, which is a nice luxury for Toll Brothers to basically have. When you think about this loan-to-value of 70% number, what that basically means is that people are putting over 30% down for the luxury segment of this market. When it comes to supply chain related issues, the Toll Brothers executive did have some questions or comments related to a lot of that as well. And one of the things that he did specifically say is that it's taking Toll Brothers a lot longer to put homes onto the market at this point in time. On average, it is taking Toll Brothers 12 to 13 months to get their homes built and out into the market, while prior to the global health crisis, it was taking them about 9 months to do so. More specifically, he goes on to say, we have not seen an improvement in the supply chain and did not expect to see an improvement for some time. We expect to see improvement in the second half of 2022. Toll is facing a shortage of more mundane items like appliances, windows, garage doors, and ductwork materials, and these things cannot be taken lightly. The takeaway from that is, of course, everyone is aware that the supply chain related issues are definitely out there, but one of the main things that he does highlight is he does expect to see some level of stabilization towards the second half of 2022, which is definitely a good thing because perhaps we can see a slight reduction in the rapid pace with which home prices are going up at this point in time. When it comes to land in particular, the Toll executive did go on to say that they are experiencing challenges due to land prices being very high. But with that said, Toll is sitting at around 80,000 lots for more than 6 years of construction at the projected 2022 construction rate. Getting land in high-cost areas where zoning can be difficult remains a challenge for a lot of these home builders as well. So what are the key takeaways when it comes to some of the commentary given by this Toll Brothers CEO? In my mind, there's really 4 key takeaways as it relates to it. 1, the builders continue to have a lot of the pricing power, due to which we can expect to see home prices continue to go up, at least for the first half of 2022, at a similar pace as they have been going up to date. Secondly, supply chain related issues continue to permeate in the home builder market as well, due to which it's going to take time to get a lot of this inventory out into the open market. Thirdly, home builders do not anticipate to be adversely impacted with the rising interest rates, assuming, of course, that these rising interest rates are within the confines of, say, a percentage and a half or so. They do think that there is enough demand for the homes that they will be producing in 2022, due to which they would not feel that they would be adversely impacted with these rising rates. Fourthly, if you want to do some stock plays as it relates to this, the home builder market does appear to be relatively undervalued, due to which there may perhaps be some upside opportunity there as well. Anyway, those are some of my key takeaways as it relates to some of the commentary made by the Toll executive as well as other industry leaders in the home builder market. Definitely include your thoughts in the comments below. I hope you enjoyed the contents of this video. Remember to like, subscribe, and ring that notification bell, and I'll see you in the next one.